the Nasdaq under the ticker SPCX, launching the largest initial public offering in stock market history. At a fixed offering price of $135 per share across 555 million Class A shares, SpaceX aims to raise a record-breaking $75 billion, targeting an implied valuation of $1.75 trillion. To the retail public, this looks like a guaranteed golden ticket. Major financial media is fueling the FOMO, shouting that this is a must-own generational asset. But as institutional macro traders, we don't trade narratives, we trade numbers. Today, we are stripping away the public relations hype to perform a complete, data-driven fundamental breakdown of Elon Musk's aerospace and AI empire. In this comprehensive masterclass, we will unpack the exact operational cash flows of Starlink, the core launch business, and the newly merged XAI sector. We will mathematically prove the immediate dilution you absorb on day one, calculate the true independent fair value of this share, and reveal the exact discount price where smart money will aggressively accumulate. If you are preparing to deploy capital into this IPO, this is the raw mathematical reality you cannot afford to miss. To discover the true worth of SpaceX, we must inspect the official numbers. For the fiscal year 2025, SpaceX generated a substantial $18.67 billion in consolidated revenue, representing a healthy 33% year-over-year growth. However, the bottom line reveals a striking contrast, a consolidated net loss of $4.93 billion for the full year. More concerning is that this cash burn has rapidly accelerated, with the first quarter of 2026 alone posting a staggering net loss of $4.27 billion. To understand why a $1.75 trillion company is running deep net losses, we must perform a sum-of-the-parts analysis and break the empire down into its three distinct operational segments. Segment 1 is connectivity, which is Starlink. This is the crown jewel and the primary cash generator. In 2025, Starlink brought in $11.38 billion in revenue, a massive 49.8% expansion year-over-year, yielding $4.42 billion in pure operating income. This explosive growth is backed by 10.3 million active global subscribers. Starlink operates as a highly scalable telecom monopoly. Segment 2 is space launch. SpaceX absolutely dominates orbital access, launching over 80% of all global mass to space in 2025, bringing in $4.08 billion in revenue. Yet, this sector registered an operating loss of $657 million. The underlying data reveals why. Over $3 billion of Starship research and development costs were fully loaded into operational expenses. This is a deliberate, long-term capital reinvestment. Segment 3 is the massive wildcard, the artificial intelligence segment. In February 2026, Elon Musk structurally merged XAI into SpaceX at a transaction valuation of $80 billion. While XAI generated $3.2 billion in revenue by leveraging X's 550 million active users and Grok subscriptions, it bled an astronomical $6.35 billion in operational costs. This massive bleed was driven by aggressive capital expenditure to secure hundreds of thousands of high-end NVIDIA clusters, including the 300-megawatt Colossus data center. This AI infrastructure expansion is the direct driver of the current multi-billion-dollar losses. Now that we have isolated the operational segment performance, let's apply reverse mathematics to analyze what the official $135 IPO price actually demands from a valuation perspective. At $135 per share, on a post-IPO share count of 13.07 billion outstanding shares, the equity valuation sits at $1.76 trillion. This structure demands a trailing price-to-sales multiple of 94.5x. To contextualize how extreme this multiplier is, NVIDIA, the most profitable AI infrastructure monopoly in history, trades at roughly 21x sales. Tesla trades at a premium of 15x sales. SpaceX is debuting at a valuation multiple that defies any historical standard for profitable, scaled megacap technology firms. Let's analyze the immediate balance sheet dilution. After raising $74.4 billion in net cash from this offering, the pro forma tangible book value per share is calculated at exactly $7.85. This means the moment you buy a share at the $135 offer price on day one, you are absorbing an immediate dilution of $127.15 per share. 94% of the capital you deploy goes into premium and future goodwill, not current tangible assets. To naturally contract into a healthy, institutional 15x sales multiple, SpaceX would need to instantly scale its revenue from $18 billion to over $117 billion, a 6.3x macro expansion just to justify its baseline listing price. To predict where this stock is going, we must evaluate the company's future plans and run a forward growth model up to the fiscal year 2027. On the launch side, SpaceX's future plan relies entirely on Starship commercialization. As Starship transitions from an expensive research and development phase into active commercial operations, it is projected to cut launch costs to orbit by up to 60%. This shift will allow the launch division to transition from a net loss into an efficient profit center, scaling launch revenue at a 22% compound annual growth rate to reach $6.08 billion by 2027. Concurrently, Starlink is projected to sustain a 32% compound growth rate, expanding global satellite internet penetration to clear $19.84 billion in 2027 connectivity revenue. In the AI segment, as massive data centers like Colossus fully mature and the heavy upfront GPU infrastructure investments stabilize, xAI is modeled to scale rapidly at a 70% growth rate, bringing in $9.25 billion by 2027 via deep integrations with autonomous networks and corporate enterprise software. Aggregating these three engines brings the projected 2027 pro forma consolidated revenue to $35.17 billion. By applying an institutional high-growth forward enterprise value-to-revenue multiple of 11x, the implied future enterprise value formats to $386 billion. Adding the $25 billion in net cash reserves post-IPO calculates the total projected future equity value at $411 billion. When we take that $411 billion future equity value and divide it by the 13.07 billion post-IPO shares, the data yields an undeniable conclusion. The independent, fundamentally backed fair worth price for a share of SpaceX tracks between $31.50 to $43 per share. Even if we analyze independent, third-party discounted cash flow models, the asset value of the core launch and Starlink operations maps out to an implied value of roughly $60 per share. Under an extreme, hyper-bullish scenario where xAI completely outperforms expectations to hit $14 billion, the absolute mathematical ceiling for this share value is $64.10. Therefore, at the official listing price of $135, there is absolutely zero margin of safety for an investor. What should we expect to happen post-listing? In the immediate short term, strict NASDAQ 100 fast entry inclusion rules will force massive passive index funds and ETFs to mechanically purchase billions of dollars in shares to match indexing weights, entirely regardless of underlying valuation. This mandatory institutional buying, combined with intense retail media hype, will likely engineer a powerful artificial pump during the initial public debut. However, history proves that once mandatory index buying concludes, lockup periods expire, and the reality of the multi-billion-dollar AI cash burn hits quarterly reports, the price must contract toward its fundamental baseline. The true worth price of this asset is $43. The smart money discount zone, where institutional investors will actually look to build large, defensive, long-term positions, is situated firmly between $31.50 and $43 per share. Our ultimate suggestion and trading blueprint is clear. SpaceX is an incredible, generation-defining business with an immense operational moat, but the IPO is priced to absolute perfection. Do not fall for the day-one retail FOMO. Let the passive index funds absorb the initial launch volatility and wait for the market structure to stabilize. True trading success belongs to those who wait for the data to align with value. The second trading begins on June 12. We will be tracking the live institutional order flow, volume blocks, and updated SEC filings. If you want deep dive, institutional-grade macro analysis across crypto, stocks, and forex without the retail hype, make sure to hit the subscribe button, smash the like button to support raw financial data, and turn on notifications. Let's hunt the real value entries together. This is Trade Hunter Analysis. No hype. Just data.